Good morning, everyone. There was some issue with the previous live, so I'll just reiterate whatever I've been, discussing in the previous live. Yesterday's paper on FR was tough and lengthy, so this is a tough and a lengthy paper. And if you have already started preparing for your SFM examination, please continue with the SFM preparation. Don't waste your time in this YouTube live discussion. For those of you who are still concerned about what happened yesterday, we could have done better, what kind of paper was this, you can watch this. It will not be a very long video. I'll try to give you broader hints and guidelines. And one thing that you have to keep in mind is the paper was tough for 99% of the students. So I'm expecting some decent amount of grace marks that would come up, which will actually help you cross that hurdle of 40 or 60. Very difficult paper to get an exemption, a lengthy one as well. In fact, this reminds me of my own FR paper in 2009, where one question was tested for the first time. Okay, so when such things happen, it becomes difficult for the students as well. Now we'll broadly touch upon how we could have approached this question, what I would have done if I was a student. I was of course scared. I would have been scared if I saw this kind of paper as a student, right? Of course, post-mortem is easier. Coming out and doing a YouTube live and discussing the paper is much easier than writing this paper in a 3-hour examination. Even if I had to write this examination, I would have struggled. Okay, I'm not claiming that because I am a faculty and I am a rank holder, I would have got 100 out of 100. That was not possible because paper itself was lengthy. But having said that, some 40 to 50 marks of paper was attemptable, was from the study material, was from the past papers, was from the RTPs. You would have seen these kind of questions. So out of 100 marks that you had to attempt, 40 to 45 marks was attemptable and manageable. And if you would have done a couple of more questions here and there partly correct, getting pass marks or reaching that 60 marks would have been possible. But I would not say, you would, of course, there will be some students who would be ending up scoring very high marks, but it was not a paper where you would have said, okay, I will get exemption in this paper. And being the first paper creates some kind of stress and tension in the mind of the student as to what will happen next. Now, my suggestion to those of you who are thinking the first paper went bad and let me drop this attempt, or let me not write this paper. I know a lot of students are in that zone. I had one of my friend way back in 2009 who had the same feeling after the first paper. It was very difficult for for us to convince him. He ultimately went ahead and wrote with half-hearted preparation and scored 200. 200 just passed. Okay, so such things can happen. Don't think that I'll only get 30 and hence I should not write. You don't know. You may get some grace marks here, some grace marks there, because overall the paper was difficult, right? Now coming to question by question analysis, the first one was on consolidation. Nothing great in the balance sheet, but lot of stuff in the adjustments, right? Now starting with the step acquisition. So first to acquire 20,000 shares and then 17,500 shares. Now here important thing is determining the fair value on date of obtaining control. So that is what you have to calculate, date of obtaining control, and continue the calculation of goodwill and capital reserve. There is a bonus related adjustment subsequently, but please understand it will not impact the calculation of goodwill or capital reserve on the date of acquisition. Then you had this 8% debentures. Now 8% debentures in Sleek Limited, that is the subsidiary, is held by Hammer Limited at a nominal value of 35,000 and 84,000 is the cost. Now here, when you cancel it out, you will cancel it out from the investments, from the debentures, because that is intercompany, and whatever is the difference here, that becomes like your loss, and you will adjust this in the P&L. Okay, if you would have done this, then it is perfectly fine. Then here you have the balance as on 1st of April 22. Control happened on 1st of October of 22. So you have to split that between what is the first 6 months and then next 6 months. You have to split the profit and then determine what is the reserves balance on 1st of October of 22. Then you have this dividend adjustment of 10%. We have seen dividend adjustment in study material questions also. One thing that is missing out here is when was it declared. They have not mentioned when was it declared. So what you can assume is an easier assumption, declared post obtaining control, and hence you will do the adjustment accordingly, right? Then they have allotted one equity share for 10 shares as bonus issue. Now when it comes to bonus issue, if you remember what you have learned in advanced accounting at CA Inter, there also we used to have this bonus issue adjustment. There we used to adjust that in the investment cost and reserves and all of that. Ultimately goodwill calculation would not change. Now when it comes to Ind AS, there is nothing that you will go back and adjust the investment, because investment is you are either using the cost model or the fair value model. You will not go back and adjust that, right? Now what should we do with this bonus? Basically, from the profit of pre-acquisition, okay, you have issued some bonus shares. From pre-acquisition profit, you have issued some bonus share that will get added to share capital of subsidiary. They will get added to, sorry, they'll get added to share capital of subsidiary. But we do not present the share capital of subsidiary in the consolidated financial statement. So then where will this adjustment go? Nothing but it will remain in the reserves, because you will not disturb that. For non-controlling interest, also it will remain in reserves only, because share capital will not be presented. So ultimately, if you see, the impact on the consolidated balance sheet will be nothing, will not be anything, just that you will move it from the general reserve to the capitalized reserve. So you will basically show it as a capitalized reserve or capital reserve and not show it as a general reserve in the balance sheet. Please remember, share capital changes will not be shown in the consolidated balance sheet because subsidiary has issued shares. So if you think logically, subsidiary has issued shares, those shares will not show in the consolidated balance sheet. So where should I show those reserves? Those reserves I can't show it on the retained earnings. So I will show them as capital reserves because I have capitalized that amount of reserves. Okay, that is one thing there. Then trade receivable is a simple straightforward adjustment. Again, sold 40% of these goods remain unsold on 31st March of year 3. We do not know whether it was sold pre-control or post-control. If I was a student, I would have assumed 40% of these goods, whatever is there, that has to be adjusted as if it has been sold post obtaining control. Entire amount being adjusted, calculating the amount and unrealized profit as on the date of consolidation, I would have eliminated, right? Then fair value has been given. This will be used to determine NCI and also fair value as on 1st of October. Okay. So now, was it a 20 out of 20 marks question? Not really. But if you would have been calm and if you would have just, completed the balance sheet, calculated goodwill on acquisition, done broader adjustments, I would say 10 to 12 marks was obtainable here. Okay, I'm not saying for everybody 20 out of 20, 10 to 12 marks was obtainable here. Sir, why not 20 out of 20? Because there were first time adjustments. There were newer adjustments which you would be confused as to what is to be done. Okay, so that is where it would happen. Then on CSR related thing, if you know the provisions and all, 8 marks question, it could have been, you would have been able to attempt them. So that was not a thing. Then here you have, sale and marketing company, and it has got, someone as a payment gateway, online sale, and all of those things. This is something similar to your, airline ticketing system, the examples that we have, understood in the class as well. You have to determine whether it is a principal or an agent. So that is again 6. This one, question number C, theoretical, purely theoretical, and if you had theoretical knowledge, if you had that conceptual knowledge, at least 5 to 6 marks, because you just have to say whether the following expenses shall form part of cost incurred to obtain a contract. So whether it will be form part of cost of contract or not, that is what you have to decide, right? And these things we discuss when we discuss in the class as well. So from that we can directly pick up. Then this question pretty interesting, slightly complicated because they have given multiple slabs. Now what is the thing here? See, similar question is there in the study material. I'm not saying this is a new question altogether, but some nuances have been added that can make it tricky. So here you have a lessee and they have entered into a lease agreement. Then there is a minimum commitment of 1 lakh units. So minimum 1 lakh units has to be, purchased, that has been given per month, and 240 per unit if the quantity is between 1 lakh to 1 lakh 20,000. So up to 1 lakh unit, the amount that you will pay is 240. So 240 into 1 lakh that will be paid. Then 246 if it is higher than 120 up to 150. Now commitment is 1 lakh. So please understand, when we talk about leases, only fixed lease payment is what we consider. Only fixed lease payment is what we consider. Variable lease payment will go to the P&L. So you will take the fixed lease payment for 1 lakh into 240. That will be the fixed component. Remaining component you will take it to P&L as a part of your purchase goods. Okay. Then as per the terms of agreement, A has exclusive right to use the production line. If they do not use, it will remain idle. Okay, and it will be entity B who will operate. It will be entity B who will operate, but entity A will get the product. Now here, this is not a regular sale purchase transaction. It is basically entity A controlling the production line. Entity A, because they say they cannot use the production line for any other customer, means I have a right to use. If I have a right to use, I will account for it as a lease transaction. I'll account for it as a lease transaction, okay, because I have right to use the machinery. But entity B also operates and maintains the production line, and they will provide the services. So one is I have a right to use asset, I have a right to use the production line. Apart from that, I am also taking some kind of operations service, because see, I can use the asset, I need the other entity to operate that asset. So that part I am taking from the entity. So there is a lease component and there is a non-lease component. Okay. Then B incurs an average cost of 195. The operator incurs an average cost of 195, and observable standalone price for the rent of the production line is 60 lakhs per month. So 60 lakhs per month is the standalone price of renting the production line, and 195 per unit is the cost that is being incurred for, per unit if you have to, let's say, operate the asset. Incremental borrowing rate is 10%. Entity A concludes that the arrangement contains a lease. So they have already decided it contains a lease, and they will not apply the practical expedient, and hence you have to identify the lease component and non-lease component. So lease component, the production line; non-lease component, the operating service. Compute and allocate the consideration. Now how will we allocate? Based on the standalone selling price. Now what is the standalone selling price? Standalone selling price is 60 lakhs for the lease component. For non-lease component, they have not given us the price. They have only given us the cost. So we'll assume that the cost itself is the standalone selling price, and accordingly 195 into 1 lakh will be my standalone selling price for this, and 60 lakhs will be the standalone price of renting. 195 plus 60, whatever I have, this will be allocated in, this 240 will be allocated in the ratio of these two, and that is how you have to allocate lease and non-lease. Then calculate the annual lease payment, get the present value, and do the lease related accounting. Okay, so that is one. This question based on your India's 105 disposal group, more or less a straightforward question. There is nothing great complication here. So here is one where you could have scored at least 6 to 7 out of 8. Then business of manufacturing bottles for pharmaceutical, non-pharmaceutical companies, 4-mark question. This is a straightforward question as it is picked up from the study material with number changes. So here you could have made 4 out of it. Then over exploration is engaged in manufacturing of drilling and mining equipment for 25 years. Management of the company is planning to expand. On 1st April, to meet the financial requirement, they issued 50,000 compulsorily convertible preference shares. So when you have a compulsorily convertible preference shares, then you have one liability component, and the compulsorily convertible part you have equity component. Coupon rate has been given 12%. So with that 12% present value, you can get the liability component, and balance part goes to equity component. Then there is the rate has been given, and 3% is the transaction cost. The transaction cost also you have to split between liability and equity component and do the accounting. Now slightly lengthy, but here you would have been able to score 10 to 12 easily. Then theory question, generally they have asked a lot of theory questions this time. Generally we don't see that. Now that is where you need conceptual understanding to address them. Then sorry, stock appreciation rights on 1st of April has been issued, and they have been given an excess of market price on the exercise rate over the share price of 250. Just a second. On the condition that there is an employment of 3 years in 100 shares. Okay, SAR is exercisable after 31st March, but before 30th of June. Fair value is given below: 42, 46, 48. 2021 company estimates 2% of employees shall leave. Then this was revised to 3%. Then actually 15 employees left in 2021, 10 left in 21-22, 8 left in 22-23. SAR was actually vested in 492. Now it was vested in 492 plus 8 plus 10 plus 15. 492 plus 8, 500, 525. So starting date is 525. Now in the first year, what you have to do is 15 already left. So 525 minus 15, 510 is what you will consider who have already left, and you will see 2% will leave in the subsequent periods, and accordingly you will do the estimate. Don't do this 525 minus 2% minus 2% and minus 2%, because you already know 15 have left. So first you will reduce 15, then reduce it by 2% each. Then in the next year, reduce it by 10 and then again reduce it by 3%. Okay. Then based on that, you can calculate the valuation. Only complication here was getting to this 525 and applying this. So think of it, 525 is given here and then you can solve this problem. Okay. Then this is based on segment reporting. So you have to identify which are the reportable segment and prepare the segment information as per Ind AS 108. Slightly lengthy, but here and there you could have got marks here as well. Then here you have a patent right for 420 life of 10 years. So this is a question where you have an thing about written down the patent to market value of 2 lakhs. Now whether it has to be impairment or revaluation, that can be a doubt. Now here they have said market value. If it is impairment, you will have fair value less cost to sell, but this is you are only doing at fair value, so this is more of revaluation, so you have to do the revaluation accounting, and here also they have given this revaluation gain. Okay. Then this is on transition, you will take the carrying amount into the consolidation, straightforward one. Then borrowed 120 lakhs from scheduled bank, terms of loan are given below, and then default has happened, they have rescheduled, and they will pay 220 lakhs at the end of the 10th year. So for that, you can do the financial instrument accounting based on this straightforward thing, nothing complicated here as well. Then shipping company is required to do major inspection and overall. So this is based on your component depreciation. You have to calculate what will be the component. The thing is, estimated cost of first overall is 10 crores. Now this is, if it is at the end of 5 years, we don't know the present value. Okay. So we'll assume that this 10 crores itself is the present value, and then we will split the cost of 40 crores between 40 as 30 and 10. Okay, that is how you will split and you will do, or I would have done in the examination, right? Then here you have question, this is based on Ind AS 8, whether there are changes in accounting policies or changes in estimates. Using the conceptual understanding, you can actually solve this question, right? So this is the broad guideline from my side, how I would have approached the question. Some of the cases you can take multiple assumptions, and if I was a student, I would have done the consolidation question towards the end, as I had did in 2009. But whatever has passed has passed. Going forward in the examinations, be prepared if at all there is an unexpected type of question, and this we could see even in the RTP. Okay, even in the RTP, if you see, a lot of new types of questions were there. So a solid conceptual understanding and proper revision will actually help you. Just by trying to do things in less amount of time, trying to do only marathons, trying to do only fast track will not help. Okay, even the respective faculties also would have whoever wherever you have taken classes from would have told you the same thing. Only having part knowledge, doing selective studies is not going to help. Okay, there have been bouncers, there have been questions like CSR 8 marks, a long question based on case study, so, and also time consuming. So prepare well, focus well, revise with your notes and all of that. Target at least 80 to 85 marks in this kind of paper to attempt, not score, to attempt 80 to 85 marks. Out of that, my experience is 50 to 55 marks is attainable, especially with questions which are from the study material. Okay, the thing that happens with the students is, the moment you see a tough question, you get scared. The moment you see a first time adjustment, you get scared. Now, even in this first question, if you ignore the first time adjustments and do the balance part and prepare the consolidated balance sheet, you will score at least 10 to 12 marks. I am telling you from my own experience, right? So that is how you would have prepared. Detailed solutions and all we'll discuss post the examinations, and prepare well for upcoming SFM examination and also subsequent examinations, where expect some kind of bounces. Though we think that this is the last attempt and institute wants to make it easier, that doesn't look like the case looking at the questions that have been tested in the examination. All the best, and we'll catch up again after all the exams get over, and we'll try to put forward the solutions to these questions, which will help you understand how you did in the examinations. All the best for remaining papers, and take care.